Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings before they make you lose your senses. Today we are diving into MFA Financial's latest proxy statement, and trust me, it's not as boring as it sounds. You might think a proxy statement, and trust me, it's not as boring as it sounds. You might think a proxy statement is just a bunch of legal jargon, but it's actually a treasure trove of information about how a company is run and what its plans are for the future. It's also your chance to have a say in that future. We'll tell you how. First, a quick overview. MFA Financial is inviting its stockholders to their annual meeting to vote on some important issues. We're talking about electing directors, ratifying their accounting firm, voting on executive pay, and approving changes to their stock compensation plan. So let's get started. Mark your calendars, the annual meeting is scheduled for June 30, 2025. But get this, it's a virtual meeting, no need to dress up or travel, just log in from your couch. This is great because it helps involve more stockholders. If you want to attend and vote, you'll need your 16-digit control number and head to the meeting website. But you can also vote ahead of time online, by phone or by mail. No excuses for not making your voice heard. One of the main things you'll be voting on is who sits on the board of directors. This year, it's about electing Lisa Polsky and Christopher Small to the board until 2028. It's important to see who is on your board because they make the big decisions. Another vote is to approve KPMG as MFA's accounting firm. Why does this matter? It's all about trust. You want to make sure that the company's books are being looked at by a reliable and independent firm. Here's where it gets interesting. The advisory vote on executive compensation, or what they call say on pay. You get to tell the company if you think their executives are being paid fairly. Also on the table, approval of their equity compensation plan, which includes increasing the number of shares available for grants so that the shares available for issuance will be 13,230 and 230,145. This is important because it affects how the company attracts and retains talent and can dilute the value of existing shares. To be able to vote, you needed to be a stockholder of record on April 8, 2025. If you own shares by then, your voice counts. MFA separates the roles of chairman and CEO. Currently, an independent director, Laurie Goodman, is the board chair. Splitting these roles ensures better oversight and prevents too much power from being concentrated in one person. The board oversees and monitors MFA's risk management, getting reports on everything from operational to financial risks. Risk management is important. After all, you need to know that your investments are safe. The filing states that 6 of the 7 directors are independent. This is vital for good governance. It ensures they act in the best interests of the stockholders, not just management. The filing includes a demographics table that outlines the gender and race of the board members. Having diversity on the board is important for bringing different perspectives. MFA offers employees a range of benefits, including competitive salaries, equity plans, 401k matches, and even student loan repayment assistance. Happy employees often translate to better performance, but remember, we have to see what the numbers say, so let's scroll on. It's great to see that MFA is thinking about environmental impact too. They have green headquarters and recycling programs. It's 2025 after all, and social responsibility is a big deal, especially to the younger investors. Let's talk about committees. The audit committee, comprised of Lisa Polsky, Laurie Goodman, Robin Josephs, and Christopher Small, is responsible for checking their financial statements, and the compensation committee, which include Robin Josephs, Christopher Small, Sheila A. Stamps, and Richard C. Wald, determine pay plans. These groups oversee the company's governance. Now, let's dig into some numbers. Audit fees for KPMG, their independent accounting firm, total $2,472,554, big number, but it shows they're serious about auditing and keeping things transparent. The filing highlights that, consistent with MFA's performance-based compensation philosophy, approximately 89.9% of the CEO's 2024 compensation was at risk. Most of it depends on how well he does his job. Scroll for fair, market value of Tefty Deferred, amounts at Dekian Jean, 2024 scroll. See also found an interesting little tidbit in the compensation of non-in-planey directors section. Some of the directors deferred compensation into stock units. As of January Finance 2024, Laurie Goodman had a fair market value of deferred amounts at around $83,854. Alright folks, time to dive into the numbers that everyone is probably waiting for, the executive compensation numbers. According to the summary compensation table in 2024 CL Knutson, the chief executive officer had a total compensation of around $8,081,167. I jumped to check the grant of plan-based awards, and it states that CL Knudsen received a total grant date fair value of $4,000.17 in stock awards. This is not bad. Jumping to the table on outstanding equity, we can see that CL Knudsen had shares or units of stock that have not vested, number 15,7481. He definitely has skin in the game. Alright, let's jump on some real numbers. I love this part. I went ahead and jumped to Appendix B here for the period of December 1, 2023 through November 30, 2024. The return on average equity was 13.73%. Nothing to scoff at. Here's an interesting little stat. We find out that the CEO pay ratio is approximately 84.87 to 1. So the CEO makes about 85 times what the median employee makes at MFA Financial. It's always worth taking note of this number because it tells you about equality at this company. In Appendix A, they named the TIN petition. I will keep an eye on these companies for sure to compare and contrast. That includes AGNC Investment Corp and Annalee Capital Management Inc., to name a few. Finally, there is some section on corporate responsibility. It does not have numbers, but does seem to state they are at least thinking about it. MFA Financial seems to be sailing along a steady course, focused on responsible growth, and are also focused on the environment and employee well-being, which is always a positive signal. The CEO's high at-risk pay package indicates a serious commitment to performance, which should comfort the average investor. However, investors should watch and keep in mind two issues. The company's returns need to stay competitive when looking at the competition, and keep an eye on the CEO's pay ratio to ensure the employees are well compensated and continue to be motivated. Overall, MFA seems to be in a stable position. The risk for shareholders is if management is taking on too much risk in pursuit of higher bonuses. Okay, that was a long one. If you found this breakdown helpful, please leave a like, comment, and subscribe. Until next time, keep those investments smart.